Of my YouTube subscribers have attended interviews in the last few weeks at hedge fund firms, and I have compiled a list of questions that they were asked and extracted the common questions, especially in the technical field of understanding how financial markets work and how hedge funds operate. The question that was asked by a large captive to most of the participants, a very common question that is asked to almost all participants is, why are hedge funds charging management fee and performance fee, and why are the fee structures so different compared to other companies, etc. Another kind of question in the related field is, do you think a hedge fund ought to charge management fee, and so on. So I'm going to break down the topic of fees over here that is charged typically by hedge funds. Okay, hedge funds charge fees that are of two different categories. The first one is the management fee. The management fee is charged by the hedge fund from the limited partners because of the fact that they are managing their money. Okay, so the management fee is a fee charged by the GP to the LP. GP over here standing for general partner, LP standing for limited partner, because they're managing the LP's funds, they're investing that money, that they're helping that capital grow, and so on and so forth. So typically hedge funds charge between 1.5% to 2% of the assets under management, that's the AUM, for such kind of considerations. Okay, so hedge funds are very particular about charging a high level of management fees because of the fact that they are helping their clients manage their money. So you might think it's not really high, but if you look at a large hedge fund which is managing billion-dollar investments, then of course they're going to make a lot of money through management fees. I have also seen hedge funds charge management fees of 1% when the market has been a little down. Okay, down, by down I mean that they're not able to get a lot of subscriptions into the fund, but most often the 2% of AUM is the hedge fund fees for classified as management fees charged by the GP to the LP. The second type of fees that is charged is called as the performance fee. The performance fee is a fee that is charged by the fund manager to the LP for outperformance. Look, when a hedge fund collects capital from limited partners and pools this capital together, they have clearly defined an investment objective, and after defining the investment objective, they also clearly define how their performance is going to be measured. So like in school days, in college days, we talk about how much marks we got at an absolute level, and we also talk about how much marks we got at a relative level, that is relative to the number of participants who are taking the examination, right? So we have the percentile, the methodology that is normally adopted during competitive exams. So over here also the hedge funds charge a performance fee if they are able to outperform the benchmark as defined in the investment document, or in the limited partnership agreement. Okay, so what is outperformance? So let's take an example of an equity fund. In an equity fund, the most commonly used outperformance is the most commonly used index is the S&P 500. Okay, if the S&P 500 has grown by 5% and the hedge fund has grown by 8%, okay, the hedge fund then qualifies to charge a performance fee, all right, because they have outperformed the underlying benchmarks. Similarly, fixed income hedge funds, funds that are focused on commodity tradings, etc., also have different indices. Okay, in this case they have to first cross the benchmark, okay, in order to qualify for the performance fee. So the performance fee is charged as a percentage of the outperformance of the fund between the fund performance and the underlying benchmark. Okay, so the performance fee doesn't get calculated every year, because it sometimes it doesn't get earned every year. It depends upon the performance of the hedge fund. So it's a very tricky kind of a situation, because if the hedge fund outperforms the index, obviously the AUM increases. There'll be more capital coming in from more investors, or existing investors can put in more capital into the fund, and the hedge fund thus can charge the same amount of management fee, but it will be getting it on a larger capital. All right. So performance of the fund is a closely measured metrics that is watched by all the LPs with a magnifying glass, so that it comes under severe scrutiny, because they have to ensure that performance funds are the performance fees are charged on a fair and a transparent manner. In order to tighten the performance fees even further, the limited partnership agreement between the hedge fund partners, that's the GP and the LP, also puts in high watermark and the hurdle rate. So let's see, what is the hurdle rate? The hurdle rate is if you have crossed the benchmark, if you have outperformed the benchmark, and there's a hurdle rate of 7%, then you would be able to qualify for the ability to charge the performance fee. Okay, so hurdle is like exactly what we see in athletics, right? In track and field games, you have to cross the hurdle. So if you cross the hurdle, then only you will be able to charge the performance fees. Then what is the high watermark? If the hedge fund is a fund for 5 years or 7 years or whatever, in that period of time, in that 5-year duration, which has been the highest performance, is calculated as the high watermark. Look, performance fees is very high. It can be as high as 18 or 20% of the outperformance. So it's charged on the profits. So management fee is charged on the assets under management. Performance fee is charged on the profits accruing after crossing the hurdle, after outperformance against the benchmark. So performance fee is extremely scrutinized when it comes to being payable by the limited partners to the general partner. So how is the performance fee calculated is an exercise that we will do on Excel sometime in a video case. But over here, let's understand that first you have to cross the hurdle, and in that 5-year period or 7-year period, or however long your investment is, the high watermark is the highest outperformance in that 5-year period. If you cross that high watermark, then you can charge a performance fees. So if you've crossed the high water mark, the next time the next level will become the high water mark. Okay, so performance fees are extremely scrutinized. They come under severe calculations. But what do I mean by severe calculations? Because literally the limited partners, since they have to pay the performance fees, will work out the numbers with a great deal of quantitative analysis of the performance of the fund manager. So to summarize this video, management fee is charged on an annual basis. Performance fees cannot be charged on an annual basis. It can be charged only on the basis of when they have outperformed. Management fee is therefore mandatory. Performance fee is when the fund has outperformed. And management fee is charged as a percentage of AUM, that's the assets under management, and performance fee is charged as a percentage of the profits that the fund has made. So there are clear distinctions between the performance fees and the management fees. Thank you so much for watching in.